IVM.
There has been a lot of noise about the Internet of Things, or IoT, and its impact on our lives. There are now billions of physical devices around the world that are now connected to the Internet. From something as small as an AirPod to something as big as a plane, all are collecting and sharing data. However, more devices and more data means more complexity. Intel helps you counter this complexity by letting you do more with less. IoT solutions from Intel fuse the power of edge and cloud computing with advanced orchestration to speed insights that help maximize revenue and reduce costs while revealing new ways to compete, win, and build your business of tomorrow. To learn more about how you can connect the unconnected in an end-to-end IoT solution built using the secure, scalable, and manageable Intel IoT platform, visit intel.in. Shunya One is brought to you by Intel. Performance made flexible. That's how wonderful gets done.
Hey everyone, welcome to Shunya One, episode 159. Amit, how are you doing? How's it going?
Doing well, man. I am doing well. It's 159. This is a good one, though. This was one of our rare excursions into the VC world rather than the entrepreneurial world.
Yes, I know. I think we do like one VC every 20 episodes. Kind of interesting to get someone to come in and talk to us. And
I don't think we've done 8 VCs, right? 159 divided by 20 would get us to like 8. I don't think we've done 8 VCs. We've done 8 people who invest. I'm sure we've done 8 people who invest, but I don't think we've done 8 VCs. I can only remember...
Probably not.
I can remember Miten. I can remember Amit Somani. I can remember Sanjay Nath from Bloom. I don't remember any others. I'm sure there are one or two more. But again, 160, a lot of names to remember.
That's also true. And it's interesting how we actually have we have had some of this VC's portfolio companies for sure on the show. So,
but 160, I think we've got all VC's portfolio companies at this point in time.
That's also true.
Yeah.
Absolutely. But yes, today we're talking to Alok Goyal from Stellaris. They're a very interesting fund. Of course, Alok himself has a very interesting story to tell about how he got into this business and the kind of companies he works with specifically. So, very interesting chat. Let's take a break and jump right in. Hey Amit, how's it going? What have you been up to?
I'm doing well, man. Continuing to read up on these Intel case studies that we've been talking about for the last few weeks, right? Really one amazing example after another.
Really? So what's got your attention this week?
So I was looking at some of the full stack solutions that Intel's been deploying, right? What they call edge to the cloud.
Yes, I have heard about that program. They actually did some work with Audi, right?
Yeah, Audi is one of the really, really cool examples. So basically what used to happen is Audi used to pull 1 out of 1,000 cars out to manage QC, right? That's basically 1 car every day. Now, Audis are expensive cars, right? So they're clearly not happy about destroying a car every day. It's way too costly.
Yeah, and it's also, I imagine not the most effective way of doing things either, right? It tells you very little about what the other 999 cars that pass through, whether they're okay or not.
So Intel deployed a solution, what they call from the edge to the cloud, right? So the solution basically involved robotic welding systems, which they combined with an algorithmic approach, right? And what this resulted in was like an end result was essentially accurate insights into what was happening on the floor.
Wow.
And this allowed them to be much more effective.
Okay, I got to check this one out too. This is also on intel.in?
Yep, for this one and a whole lot more other really interesting case studies, you can go to intel.in and read up on this stuff and see how businesses are working with Intel today.
Hey Alok, welcome to Shunya One. How are you doing?
Doing very well, Shiladitya. Thank you so much for having me here.
No, it's great to have you and thanks for making the time. We don't speak to too many VCs on Shunya One, but ever so often we do. And we love to sort of get your perspective on obviously the entrepreneurship scene in India, how things have been going. It's been an interesting few years for various reasons in the funding world, as you know. And from a different perspective of, when we talk to founders and we talk to obviously, people who are running businesses, we try to understand the genesis of where the inspiration came from, what they did, what their story has been like. Maybe you could tell us the same about yourself and of course, Stellaris and the kind of companies you work with.
Got it. Maybe, Shiladitya, I'll give you a little bit of a historical background here as well. I started out with my undergrad in computer science from IIT Delhi. Always thought I wanted to be a professor and do research. I went for my PhD. And I know this is going to sound very stupid now in hindsight, but 93, when I was doing my PhD, is when Infosys went public. And I was working with Microsoft in that summer when that IPO happened. And something in my mind clicked, which is that I thought that, look, if these guys can build a company, maybe so can I. And suddenly my plans in life changed. I thought I should come back to India, start a company. Another friend of mine and I, we both quit our PhDs, came back to India, tried starting a product engineering company. Clearly, you haven't heard my IPO, so you know that it didn't go anywhere. So the net of it is that I think since that time, my desire to be an entrepreneur was very high. Life took a bit of different turns and twists. Many of them I thought I took because it'll help me become an entrepreneur. So, for example, I was initially a developer in the electronic design automation space. I thought that was not taking me anywhere close to being an entrepreneur. Quit. I thought I need to learn business. Joined McKinsey, which was good. But then I thought India is going to be a hard place. Eventually went to Silicon Valley, worked with a firm which used to work primarily with startups. All seemed great until the downturn of 2001, 2002 happened. And I think that was a bit of a jolt to me through some sheer lack of thinking, lack of judgment. After 10 years of working, I had $0 in my bank account. So we were pretty much bankrupt. And as much as I wanted to be an entrepreneur, I realized that the first thing you need is to be able to stand on your own feet. And then I joined Siebel. Many of you would not have heard it. It's the iconic company in the CRM space, later got acquired by Oracle. So I entered sales, software sales for large deals, initially in Siebel, then with SAP. And I had only one objective, that I need to get to a point where I have the financial freedom to do what I want to do. And that path continued for 10 years. I eventually came to India, led the SAP P&L in India as well. But that bug was still there. And I thought I need to come back to entrepreneurship. But as you age, you also begin to realize whether you have an entrepreneur in you or you don't have an entrepreneur in you. And I think by that time, I reached the conclusion that I'm not an entrepreneur. But I love hanging out with entrepreneurs. And I thought the next best thing I can do is be an early stage VC, even though most of my experience was actually more suited towards late stage private equity. Right. For example, SAP India, when I came in, we were about $100 million in revenue. By the time I left, we were about $500 million in revenue. A classical sort of segment where a late stage PE would be interested. But my heart lied in early stage tech. And that's what led me to come to Helion. I was part of Helion for third fund for 3 years until three of us decided that we want to break away and start a new fund. So you can say that in a cheesy way, I guess we became an entrepreneur. Yeah. Not quite though, of course. Building a fund is a different thing than actually starting a real company. But beginning 2016 is when we started raising our fund. And 2017 January, which is about 5 years back now, is when we established Stellaris. So been investing since then. And I'm primarily a SaaS investor. That's the background I guess I came with. So our team is, even though we are fairly agnostic within the tech space, but different people focus on different areas. And my focus largely has been in SaaS.
Wonderful.
If I could, right? I mean, it seems like a interesting journey in that sense, right? And I'd like to understand what kind of drove it. The idea that you went from developer to entrepreneurial thought into sales, right? So that's, and then investing post that, right? But I mean, that seems like a not very traditional thing where, Shiladitya, to the contrary, most people who are developers don't really go into sales. That at least that's not.
I was going to say I did something like that.
I know, yeah. You too, with the exception of you, most people I don't really see doing that. What led to that?
See, Amit, there wasn't a very sort of deep thought. And if you go back to early 90s, just the mentoring and the environment for startups was non-existent compared to where it is today. So when my friend and we started the company, we reached the point where we were in many different sales situations. And to be honest, all of these are very proprietary. It was ours for the taking. But the two of us had a lot of enthusiasm, but very little business sense. And we couldn't close a single contract. And that is what led me to believe that, look, I need to learn sales first. I knew that I could write code. And I was very arrogant. I thought I could write code better than anybody else in those days. but I thought I needed to learn sales. And I tried approaching a lot of companies. And maybe since I'm being historical, if you go back to those days, sales-oriented companies in India used to be HCL, used to be this company called PCL, Pertec Computers Limited, which doesn't exist any longer. I remember convincing PCL guys that, look, please hire me as a sales guy. I was ready to be a foot soldier, but I just wanted to learn sales. And they declined. They said that, look, we think you're a tech guy, you can't do sales.
Yeah.
And it was just a chance happening that a friend of mine in McKinsey said that, look, we're looking to hire the non-IIT, non-IIM backgrounds. And why don't you come in? So I happened to be the first person in the Delhi office of McKinsey who came without an MBA and was a diversity hire at that point, if
wow.
you will. Therefore. And that initiated my journey into learning business in some sense. And but the bug always continued. My wife was an entrepreneur. She started one company in the Valley in late 90s. She started another company later in India. So I was seeing it from close proximity. But I think I've also realized it requires an amazing amount of humility to be an entrepreneur. And I don't think I had it.
Yeah, but it's interesting that the journey from, this inclination to do sales, again, I'm speaking very much from my personal experience also, is it's part of being an entrepreneur. The ability to sell is a founder skill. So, when you said you wanted to learn it, when you said you wanted to jump into the business side of things, which you did, essentially you were gearing yourself to sort of take that next step. And I think what happened obviously was that, you realized you could help the same people who you were trying to be by being a VC. In fact, that specific time in India, I think, can you share a little bit of the insights you had as to even when joining, let's say, Helion or breaking out, like what drove you to sort of continue down that path of being on the venture side of things?
So, Shiladitya, and this is a genuine belief, just goes to the core inside me, is that I believe that entrepreneurs are very special people. See, if you look at us, we say no 499 times out of 500 times to people. Yet those who start companies, not only do they dream, and this is, I'm actually quoting Vinod Khosla, I read in one of his HBR articles, that not only do you need to be a dreamer, but you need to be foolish enough also to pursue your dream. When everybody tells you no, you still start something. And I feel that every entrepreneur is, in his or her own way, is trying to change the status quo of the world in some small way. They are envisioning a different world. That's why they start a company. You can agree or disagree with them. That's your choice, and mostly we disagree. That's our job, unfortunately. But I think the opportunity to hang around with such passionate people, I think I just would give up an arm and a leg to be around such people. I also believe that, after having been in sales job for a decade, I realized that how stunted my learning got. Of course, I was selling, and I was fairly successful in my sales career. But every meeting as a VC, you learn something new. And you actually feel stupid in most meetings as a VC. Because as I said, if somebody's trying to change the world, they have something new to offer, and you have to try and understand what they're trying to do. And I think that amount of learning is very hard to get in any other profession. So that was primarily the reason that drove me towards venture. I was lucky that Helion was looking to build an enterprise software and services practice at that point. And they felt it is better done by hiring somebody with that experience as opposed to doing it internally. And I was, I guess, a diversity hire all over again at Helion and benefited from, if they had not given me the opportunity, I might not have been a VC.
Very interesting. And, I also want to obviously go a little deeper into the SaaS side of things, but maybe, in some time. Before that, what was your thesis? Even in Helion, or even, let's say, once you broke out and, started Stellaris, what was the core thesis? Because this was, again, at a time when I think funding scenario in India was at its, I would say just maturing. Like 5 years ago was when you had your, I don't know if we had our first round of exits either, or maybe just did.
No, we did not.
Yeah. So what sort of gave you the confidence to do something, and why specifically?
See, Shil, I was only a VC for 3 years, so not for long. My two colleagues who started with me, Ritesh and Rahul, they had been doing venture since 2007. And you are quite right, Shiladitya, that there was a lot of promise of startups and venture capital in India, but that promise had not materialized itself, at least by 2016. I would argue a lot of capital had gone in, nothing had come out.
Yeah.
Exits were still nowhere to be seen. In fact, in that sense, I would say that the product market fit for India as a startup ecosystem had not been established by that. However, what drove the underlying belief, you can say, were some of the indicators we were seeing at the ground level. In the sense, for example, when Helion started, India had about 20 million internet users and just 1 million transacting users. When we were starting Stellaris, there were 50 million transacting users and probably 300 to 400 million internet users. Similarly, when you started companies in the past, look at Flipkart, great company. Yeah. But guess what? Unlike an Amazon in US, which would plug into a UPS or a FedEx, Flipkart had to build eCart to build Flipkart. Look at just the whole COD, right? Unlike using a PayPal in US. But what we were also seeing is that some of this underlying infrastructure, whether it was through a delivery, on the logistics side, through Paytm, on the payment side, a lot of this underlying infrastructure was also coming online. And we felt that building companies was becoming easier and faster in India. And with the immediate market available and the inclination to adopt these newer offerings to be much higher than what it was before. So at least we were very bullish on where India would go. But even though you might remember 2015 end was a massive dip.
Yeah.
Suddenly nobody wanted to. We started exactly at the lowest point, if I may say, in the last decade.
Yeah.
But our belief was very high.
2015 was the huge high and then the huge crash as well. Yeah.
So when we started doing our fundraise, it was March of 2016, I remember. Nobody wanted to touch India. Nobody wanted to touch venture. Everybody felt that Amazon is kicking Flipkart's butt. And if the company where the most amount of capital has gone in can't be successful, why would anything else be successful? But anyway, that's how many journeys start. Ours was no different in that sense. Again, we are fortunate that we have seen an up curve since then. But I would say we were very excited. Our belief at that point was very high. And the belief is only higher at this point.
And at that point, did you choose what exactly you were going out to do? You mentioned SAAS, but was that your core thesis from day one? Or was it for the fund or just for yourself?
Yeah, no, so Shiladitya, I would say that India has gone through 3 phases of venture. If you go to the pre-2006 era, there were just a couple of funds. There was ICICI Venture, there was Chris Capital, SAF had existed in its earlier form, but pretty much no capital was available. And therefore, if you look at the first companies being built, whether it was a Naukri, frankly, for most part, Make My Trip as well, Zoho, all these companies were built with no capital. And Just Dial also, they took a long time to build what they built. And they were great companies, of course. The phase 2, which I would say mid-2000 onwards, there was capital, but there were broadly still about 7 or 8 companies, 7 or 8 funds. You can count them on your fingers. Matrix, Kalari, Helion, Nexus, Sequoia, Westbridge, SAF, of course, and my apologies, I'm sure IDG, I must be missing 1 or 2, but broadly, that was a pack of funds. They used to write the seed checks. They used to write the Series A checks. They had to write the Series B checks. There was very little available in seed funding, and there was pretty much nothing to speak of in Series B, Series C. And that was phase 2, and I think that's where a lot of the entrepreneurs we see successful today were coming around. And I think we are seeing the version 3 of the market today. Suddenly, the number of funds have exploded as well. There are funds which are 10 million funds, 30 million funds, 50 million funds, 100 million funds, 200 million funds. Then there are these Series B, Series C funds, all across the spectrum, there are funds today. As that has happened, we're also seeing, by the way, Gen 2 entrepreneurs. So if you look at it, in fact, if I look at Stellaris, I would say easily 70% of our founders that we have backed are either those which are starting a second time around, or those which have been part of a successful startup journey, left those journeys to start. So these guys, if I may say, are not as green. They've seen these journeys before.
Yeah.
They bring a lot to the table. They expect a lot also from the people that they partner with. So our thesis when we started Stellaris was that there needs to be a lot more depth in the VC ecosystem than what has been in the past. I think you could afford to be a generalist. Broadly, I'll say that version 2 to version 3 is a move from being a generalist to a specialist.
Yes.
And that manifests itself in multiple different ways. What it does is that you can be generalist as a fund, which is what we are. But as an individual, you need to be super focused. And I have no shame in admitting that if somebody were to come to me for a consumer travel business, I think my knowledge and my expertise in that business is as good as a panwala near my home. That's it. And but I'm lucky because my colleagues understand that very well. But we all chose that we will go very specialized in certain segments. So, for example, my colleague Rahul, he has been doing commerce and edtech for the last now 12, 13 years. Similarly, my colleague Ritesh has been doing healthcare and financial services for the same amount of. Of course, I'm younger in the VC ecosystem in that sense. Only spent the last 9 years now. I came from the enterprise background, so I focus on SaaS and some other B2B businesses. But that's how we have organized ourselves. It allows us to go deeper. It allows us to build thesis ahead of time. Our belief in general is that by the time something appears in economic times of mint, it is too late for us to enter. We enter when nobody's talking about it. That's our philosophy. The other way it manifests itself is that if we are building thesis in certain spaces and we are specializing by spaces, we don't need to hit a lot of bullets there. Then we better come in with a lot more conviction, and we should be willing to make more concentrated bets. And where I'm going with that statement is that, look, if you make a large number of investments, then you broadly represent the market. You are going to be market average then. And if anybody has ever done that, you're buying the index. And if anybody has ever done the index calculation on venture, by the way, that index doesn't look that great.
Yeah.
And the only way you make money is when you concentrate yourself. And that was the other belief that we came in. And the fourth belief that we came in with is that I think the most exciting thing in the Indian startup ecosystem is that founders from the past who have been somewhat successful or very successful, pretty much all of them are very keen to pay it forward. And we were the first fund when we started, and today a lot more funds do it, which by design incorporated their participation into the fund. So while we never announced anybody's name, but I will leave it to you to guess that some of the most successful founders in India, they were investors in our first fund and now in our second fund. And they help us in building thesis. They help us in recommending some of the best deals that they think are fit for us to look at. They are the first point of contact when we want to do diligence. When we write a check, in addition to them participating in the fund as well, they participate directly as well, where they can lend very specific expertise to these companies as well. And therefore, we incorporate them in the entire venture life cycle as well. And those were some of the core beliefs that we started the fund with. That being said, I still think that venture is a category where there is only so much you can differentiate on the strategy side. It just boils down to execution day in, day out.
Just like a startup. So
just like a startup as well.
On that note, I want to dig a little deeper on the SaaS side of things, because obviously that's of very personal interest to me. But before we do that, let's take a quick break, come back and talk to Alok again.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into A Show About Crypto with me, Rohan Joshi, my new adventure on IVM Podcasts. CoinSwitch, kuch to badlega.
Hey, welcome back, everyone. Talking to Alok about a lot of things in the world of VC. And Alok, thank you for giving us that sort of the background view of how you obviously got in and started out. But the question I've been waiting to ask, obviously, or dig a little deeper into, is your SaaS thesis, right? There have been SaaS investors in your phase 2 for sure, and definitely are in phase 3, like you were sharing earlier. SaaS has been an interesting market for India, or at least investment in India, whereas the market has been, of course, outside. So where did you come in with, when you came in from your enterprise background of selling in India, right, with these super large enterprise companies who are still the stalwarts of, let's say, the SaaS industry, to now funding their replicas or, their future sort of Indian counterparts? What was it that you saw? And, talk us through a few of the early bets. I know I'm sure I know you had a recent exit as well. So, talk us through some of those stories of interesting startups you found, and which sort of doubled down on your thesis of why SaaS will work here?
So when I started looking at SaaS back in 2013, in fact, when I came in, I must confess that even though at SAP we had made a few acquisitions, but that was towards the tail end of my career at SAP. And my training, if I may say, my muscle lied pretty much in the classical on-premise large deals. That's what I used to do at SAP. So it's not like I understood SaaS as I came into the venture business. My first 6 months, I decided that I don't want to write any check. I will just meet companies. And I remember that, at that point, there wasn't really a successful SaaS company. Even Freshworks was, I think, $4 or $5 million ARR at that point in time. Today, there are probably 100 companies like that. So I met with anyone that I could meet here. I also spent a lot of time in Silicon Valley just understanding where SaaS is going. Broadly, my thesis was that, look, success from India is going to be more of an exception rather than the rule. And there is a pattern to what can create success from India, which is going to be existing categories, so Me Too companies, hopefully fast followers, low price point that you can generate demand digitally and sell on the phone sitting from India, so that you have an advantage in the sales cost. These are going to be, therefore, the SMB categories where you can go to market, because they are the ones that will be low ticket size, do not require a feet on street sales, and largely application companies and not deep tech companies. At least the belief was that India doesn't yet have the deep tech talent. So that's a thesis with which I started. And you fast forward to today, the world looks completely different. There is no single flavor to SaaS from India. Large enterprise, small enterprise, application, deep tech, horizontal SaaS, vertical SaaS, sales-led growth, product-led growth. There is just about every dimension. Today, I think you can find companies which are being very successful. But that's how I started. My first SaaS bet actually was WhatFix. Interestingly, this was a company when I should actually give you the story behind this, because as smart as we think we are, if you really look at the reality, it also tells us how dumb we were. So WhatFix essentially was a layer that would sit on top of existing software and will make it easy for enterprise users to use those applications. Right? Let's say you are a user of Salesforce or SAP or something else. A lot of functionality in those software, you don't know how to use them. It'll sit as a support and help layer on top of it.
Yeah, it's an onboarding tool. Yeah,
it's an onboarding and support, continuous support stuff. So I met WhatFix founders for the first time at an event in April of 2014, and I didn't even take notice. I had an analyst in my team by the name Karan Gupta. He is a very smart guy, by the way. IT Delhi, was at BCG. And he was tracking the company and he really liked the product. And he asked me to meet them, I think June or July of 2014. And I said, no, I don't want to meet. And my argument was that, look, the world is going toward design thinking. Software is becoming easier and easier to use. Nobody is going to need another layer of software to use other software. And therefore, to me, this is a sunset industry. It's not going to work. And I even refused to meet. And he asked me repeatedly. And I said, no, sorry, I'm not going to meet. I have better things to do with my time than meeting the WhatFix guys. One day he got frustrated and he says, Alok, okay, fine, don't meet them. Can I show you a demo at least? And I said, fine, why don't you show me a demo? And we spent 5 minutes. I loved the product so much that I said, let's call these guys tomorrow. And I think in the last 9 years, that's the fastest check I wrote. I met them, I think, on a Friday morning. And on Monday morning, I gave them a term sheet. So again, why am I saying this? I think I could have very easily missed it because I was too full of myself. I had this strong belief as to why this is not going to work. But for my colleague Karan, I think I would have never actually paid attention to WhatFix as well. So much for the thesis. I think sometimes we all build in our heads also.
Yeah.
When I met them, there were only two founders, both engineers. I didn't know how to sell. I invested in them because I thought they'll sell to SMBs. They will sell at a very low ticket size, which was $1,000 per customer per year. And that was my thesis, by the way. Now, the thesis itself could not be more wrong either. Yeah. Today, they regularly do deals of $250,000, $500,000. They have 100 plus Fortune 1000 customers and 50 plus Fortune 500 customers. They have a sales force across the globe, US, Germany, UK, Australia, New Zealand, you name it. So in many ways, what the tree that has come out of that seed looks as different as it possibly could from the thesis that I originally imagined that to be. But that's what some of these are in the end. You know only so much when you invest. In hindsight, we are lucky, and of course, we talk about how much we knew. But the reality is, I still think, for most part, we know very little when we at least write the first check. I think by the time I wrote a second check, I had a very strong faith in founders in that company. I thought the world of them, and that has stayed that way. And I genuinely believe that these are two of the best founders Indian SaaS ecosystem has seen. But I didn't know that when I wrote the first check.
Wow, interesting. What sort of, since you showed us that journey as well, and of course, Whatfix, I do know the company has obviously become huge. I think they've raised multiple rounds, obviously. But talk us through a few more. Like, how has that since evolved your, let's say, understanding of SaaS? And I ask this very coming from a SaaS person selling SaaS in India myself. Selling. The thesis itself, I know of a lot of people has changed from companies being in India, selling outwards, the earlier point that you made about, doing phone sales and avoiding, let's say, selling feet on street, to selling within the country itself, within this region itself. Have you seen that evolve, and what's your take on that part of the market?
It has evolved quite a bit. In fact, the one big thing that has changed from 2013 to now, if I take that span of time, when a new company was being created, the only way for them to get to product market fit was to sell to customers in the US. There weren't even early adopters in India at that point in time.
Yeah.
And if I may say so, I still have not been able to completely build the conviction that you can build an IPO-able company with India as a market, or even Asia as a market, for that matter. I still think that you need to be successful in the Western world. And for most part, you need to be successful in the US if you want to build a large SaaS company. However, what has changed is that 0 to 1 journey, or even the 1 to 5 journey, and in many cases, the 1 to 10 journey as well, actually, I believe can be traversed in India today, because the customers who are buying your products, they're as cutting edge as anybody in Silicon Valley would be. So if you talk to any SaaS company today, who are their first customers? Capillary, Darwinbox, ChargeBee, Whatfix, Mindtickle, Yellow.ai, right? All these companies are their first customers today. These companies are not thinking any differently from their peers in Silicon Valley. Since I'm an investor in Whatfix, last year I checked with them, and this is actually now 1.5 years back. They were using 92 SaaS applications in April 2020. I'm sure that number has grown by now.
Yeah,
right?
Different departments, everyone. Yeah,
exactly. So these companies now think very differently when it comes to use of technology. You look at initial successes in India who have made success in the Indian market. At least 3 come to my mind, which have reached a significant milestone. One would be Darwinbox, Yellow.ai, and Signsy in our portfolio. All of these companies have done 10 million or more ARR by just primarily being in India. And that was not thinkable in the past. So in that sense, yes, my thesis has actually changed quite a bit. Earlier, I would not invest in companies if they didn't already have referenceable US customers. That part, actually, I don't worry about as much. I also believe that the ecosystem has learned so much that the beat of learning a go-to-market outside the country has actually become so much more easier for entrepreneurs today than it was in the past.
Absolutely.
I'm going to go backwards a little bit, right, from something you said much earlier. You were talking about exits and how they are, what kind of exits are available in Indian markets, right? I was wondering if you could expand a little bit on how you're thinking of that, right? Because you mentioned that exits are a relatively recent phenomena, and what are the characteristics that you believe that are leading to the fact that we're starting to see exits occur now, which earlier we were not able to see in the same kinds of ways, right? I mean, like, what's changed? What are the realities that you see that have changed right now and that are available now to the market at large, which were not there earlier?
Quite a few things in my mind, Amit. First of all, I think when you look at exits, we believe that there is no such thing as a great time to enter. We feel across the vintages, every year is a great year to enter companies, especially if you're doing early stage investing. So we maintain a constant pace in that sense of investing. However, when you look at exits, I'm just going to pick a bit of a random number here, but every 5 years, there will be that 1 to 2 year period where it's a good exit window and the exit window then shuts again for some time. I think the last 2 years, we have witnessed that window in India where it's been a good exit market, probably built sort of beginning, middle of last year is when this started. We believe it's not going to stay forever, but at least it's been there. Why has it reached the point it has reached? Lots of different factors. I think number one is that today you can sell or you can exit your position either in secondary or the company as a whole to other larger startups as well. Think about a Byju's buying a White Hat Junior. I think today, as the number of companies with valuation anywhere from 1 billion to 40 billion, just look at that pack has grown so large in the country that they can actually reasonably acquire other companies, which was not possible in the past. That critical mass exists today. Also, because many of these companies have grown larger, we are seeing a lot of activity from the traditional companies. Tatas were not that active 4 years back. Reliance was not that active 4 years back, right? Suddenly, look at the number of checks they're writing in the ecosystem. So that has grown. I think the third is that just the growth of tech as a percentage of market capitalization globally, if you look at it, that has grown. In the US, if you look at S&P 500, again, I'm pretty sure I'm wrong with my numbers, but I think 20-25% is just the top 5 tech companies. Everybody is watching that phenomenon. Even in India, by the way, if you look at just until some time back, India's market capitalization was about $2.5 trillion. $500 billion out of it was just the IT services companies. They were very small when they started, but that tech alone, IT services tech alone, was 20% of our market capitalization. And everybody realizes that this is going to be a massive part of our capitalization going forward. So the public markets have also begun to take a liking, I would say, to taking positions in this market. And therefore, both late-stage funds as well as the public markets, and that's particularly true for 2021, we have seen so many exits happen. So, which I think is a good sign. And lastly, I think there has been a lot of notice that's coming from companies outside the country. In our portfolio, I'll give you an example. We recently exited Slintel. Outstanding company, by the way. One of my favorite that has been created. Yeah. They were growing like wildfire until Sixth Sense made them an offer that we could not resist, frankly, in the end. But those kinds of transactions are also growing. And therefore, I think just the number of opportunities, and specifically for an early stage investor like us, I can tell you that in pretty much every good company of ours, and I mean it, pretty much every good company of ours today, if we wanted to liquidate our position, we can liquidate it yesterday. That's how much demand is there.
So it's a combination of public acceptance, the larger scale of startups, and additional participation of the existing Indian companies, right? What flipped that switch for them? Because I mean, the Indian companies were there, they were doing this stuff, but they were, or doing it in a very weird way, right? But I mean, something flipped. I'm talking about the Reliance, the Tatas, the Airtels of the world, right? What flipped the switch for them, right? I mean, they were not participating in the M&A market in real ways before.
I think it's a question of reaching a critical mass in many things. And, once you reach a critical mass, suddenly people begin to look at the ecosystem very, very differently. When large companies like Paytm, Zomato, Byju's, Ola, so many of these were getting Make My Trip. Once these begin to get created, I think people realize that, look, this market is actually very, very. If you look at the larger people, again, look at the Tatas, the Birlas, the Reliances of the world, they all waited because they were not sure whether the market opportunity is large enough or not. But the moment people realize that the market opportunity is large enough, they all want to participate in this. And we are seeing that switch flip in the last couple of years, totally.
Yeah, absolutely. In fact, just to the point of that you mentioned Slintel, of course, I've had a chance to speak to Deepak there early on as well about, how they were doing, how things were. And they were a sales enablement sort of a company, right? Their product also helps other SaaS companies in a lot of ways grow their business. And now that acquisitions happened. You mentioned Signsy. Arpit has actually been on our show as a guest. So
interesting.
Yeah, so it's been interesting how we've seen a lot of these companies talk about their product roadmap and obviously expand over the years. And there's so much happening in this world, in the SaaS world especially. Given that, I think for you personally and as Stellaris, maybe you mentioned early on, and I think you've kept to that thesis of being very, very selective on the kind of companies you choose to go after. And as closing notes, Alok, given that we obviously have a lot of listeners who are entrepreneurs or would-be entrepreneurs looking out, what do you want to tell them as to who should talk to you, and what are you looking for when you're talking to new people to add to your portfolio today? And of course, share how they can reach you and where's the best place to contact you.
So it's a tough question to answer in terms of what are we looking for, because the challenge with being an investor, actually, let me flip it. We strongly believe that there is no single template of being a great entrepreneur. In fact, the reason great entrepreneurs are great is because they create their own template and do not follow them. And which is what makes our job both fun and hard, because I know that we all have these templates in our head from the past, and we need to continuously shed these templates to be able to see with clarity that we should be seeing while backing someone. And in the end, I think this just boils down to people having passion for what they are building and people willing to play the long game. I think, in fact, I see that there is a risk in the current environment that there are many people who are entering entrepreneurship with a relatively shorter term mindset, which is no different, by the way, than what happened in 2000. I remember a lot of my McKinsey friends left McKinsey just to start. And eventually 1 year later, went back to McKinsey. And I fear that a lot of those entrepreneurs are also going to come in at this point in time. Mm-hmm. But at the same time, I think a lot of very long-term builders are also going to come. It's a journey which you need to do not because you are catering to investors or to raise capital. You deeply believe in a problem. That's what you're looking to solve. And do remember that building a company will take 8 to 10 years. Nothing good, actually, doesn't matter what it is, happens in a short time. It takes a decade to build anything meaningful. Be prepared that there'll be a few dips, there'll be a few booms in that journey, but you are prepared to stay the course, and that's why you are in that. That's why you're a founder, and that's why you're starting. But there is no good way or bad way to contact us. Just write to us directly. We respond to every single mail that we get from every founder, and we get about 4,000 of these per year. But we respond to every single email that comes to us. So we would love to talk to you no matter what you're building. Chances are, most likely, we're still going to say no. Unfortunately, that's our job. But I know that we will learn a lot from you. And hopefully, in the process, we'll also, you might be able to learn something from that conversation as well.
Awesome. Also, just a quick reminder, everybody, we appreciate reviews or ratings wherever you're listening to this. Apple Podcasts or Ghana or Savan or wherever you're listening to this, if you could do a rating or a review, that would be helpful. You could also reach out to Shiladitya or me on social media, and we will respond, hopefully.
Yeah, thank you to everyone who's shared that Shunya One was part of their Spotify Wrapped for 2021. Interesting stuff there. So good to know that we have a few listeners where we are in the top charts. So, but on that note, Alok, thank you so much for being a guest with us today. This was a fascinating conversation, and of course, we will share the Stellaris contact details for everyone in the details for the podcast. So hopefully, some of them will be inspired to reach out to you. Who knows? Maybe even have the good fortune of working with you. So thank you so much. We hope to keep hearing about consecutive successes and, of course, helping the growth of the startup ecosystem here.
No, thank you, Shiladitya. Thank you, Amit. Really enjoyed the conversation. It's one of the very few conversations I've had which was not scripted and completely free-flowing. So I truly enjoyed it.
That is what we aim to do. Thank you.
All right. Thank you.
Shunya One is brought to you by Intel. Performance made flexible. That's how wonderful gets done. Hey everybody, it's been another great week on the IVM Podcast Network. On Ikka Dukka Economy, Abhinav talks to Dr. Bharat Junjunwala author and professor of II in Bangalore, to discuss inflation and its effects on our daily lives. On Storytellers and Storytellers, Vineet sits down to talk to Ankit Chauhan, aka Oye Ankit, the man behind the internet's most viral mashups. On Press Decode, Sarah Vagda and Prafulla discuss the biggest news of the week, the brand new COVID variant Omicron. On The Longest Constitution, Priya takes us through gender inequity at work and how women have changed these regulations. And on Agla Station Adulthood, Ritash and Ayushi talk to Nikhil Taneja. Nikhil is an old friend of the network. He's the founder and CEO of Yuva. Yuva is a socially conscious youth media organization, and in this episode, he discusses toxic masculinity. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. And finally, do remember that many of our shows are available on YouTube. You can check that out by going to our website, ivmpodcast.com/YouTube, where we have a list of all of our various YouTube channels. Finally, we'd like to thank the sponsors on the network this week: Cred, Bank of Baroda, HDFC Mutual Fund, CoinSwitch, Kuber, Intel, and Oxfam India. Thank you so much for making this possible.
Namaste, this is Cyrus Brocha. I am part of the government cancel culture program to remove rubbish off all the different streams available. So what we have is all the collected rubbish we put together on our show. It's called Cyrus Says. It's on IVM Podcast. You have to watch it and listen to it. It's on our app. It's on our website. It's on the YouTube channel. It's on Facebook. There are many different ways. Don't bother me and ask me how. You have to find out. We talk to different personalities. Many of them are known. Some are just people we meet downstairs and invite them up for chai. But the point is, it's fun and it's very therapeutic. So please join in and listen to Cyrus Says.